Guys, last week we were expecting that the manipulation may happen only in first 2 days, Monday and Tuesday. So no doubt something was there on Monday, okay, but on Tuesday the S&P 500 corrected itself. Now on Wednesday, when the CPI data, CPI and the core CPI inflation data was published, then what happened is that we have seen, surprisingly, we have seen a thin green candle, right? So this was the very first indication that something is not right. Then what happened is that on Thursday, 14th of September, we have seen a gap up open and then a very heavy upward movement, 1% upward movement in the S&P 500. Now, on Thursday, the PPI data was published, and PPI data further confirmed that whatever the CPI data has confirmed, the inflation, bullish inflation, the same was confirmed by the PPI data. But the best part of the PPI data was that this PPI data was not published on major news channels, okay, or on these the major, these the news portals. So in my pre-market update on September 14th, I have informed my community members that see, this is a potential trap, because this important data, PPI data, it was not published anywhere. So this was there. Now we have seen that on Friday there was very heavy fall, extremely heavy fall. This means that now the S&P 500 and the entire stock market is back to where it was supposed to be. And this very heavy fall, than that, last week in my previous S&P 500 technical analysis, I have very much cleared this thing, that 4449 in the bearish side, 4471, and then 4497, and beyond 4497 we have 452737. This means that S&P 500 is not going bullish in any form or in any manner until and unless the S&P 500 clears the 452737 zone. Okay, other than that, but before it can reach to 4527 and 4537, it must deal with 4597. It must survive, sustain and survive above 4497. 4471 was the level that was what we can say as a tiebreaker. Tiebreaker means if the S&P 500 sustains above 4471, this means it is going to move up. If the S&P 500 gives up 4471 and remains below 4471, this means that it has given up and it is coming down to 4449. Okay, so this you can see 4449 and 4471. So guys, overall, except this the manipulated movement, okay, on Thursday, otherwise the movement of the S&P 500 was as expected. And yes, we were able to identify the trap, and my community members, they were very well aware of this thing. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to get these daily updates, the daily analysis of the S&P 500, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the agenda of this S&P 500 technical analysis. And this S&P 500 technical analysis is applicable from September 18th, which is Monday, through September 22nd, that will be Friday. And other than that guys, okay, let me add a small disclaimer that this S&P 500 technical analysis is not a financial advice in any form or in any manner. And because I do not know what you are going to trade into and how you are going to trade, that is why whatever profits and losses you are seeing, this or these profit and losses are all yours. Now guys, the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Okay, so again, the good thing is that on the weekly chart of the S&P 500, 2 consecutive weeks we are seeing weakness. Okay, I will show you, okay, how we are seeing this the weakness. And guys, as you know that weekly chart is the long term picture. Okay, means long term picture means a month, okay, or a quarter. That is the weekly chart, right? Anyways, I will discuss the weekly chart in detail, okay, the technicals on the weekly chart, so that there's a long term picture is clear. Then comes the second point of the agenda, and the second point of the agenda of this S&P 500 technical analysis is the CPI, PPI, inflation and FOMC. So I will discuss the CPI in detail, PPI in detail, okay, and the inflation through the CPI and the PPI, okay, and its potential outcome on the FOMC. If you have heard, okay, or if you have read, okay, everywhere, okay, it was there that the Feds are not going to raise the interest rates, okay, this month. So this was published on all of these the news channels, in all of these articles. Okay, so this was their own point of view, right? and because of that point of view they have simply pushed it up, and then on Friday, okay, everything came down. Then comes the third point of the agenda, and the third point of the agenda is S&P 500 technical analysis on the daily chart. Okay, this was the weekly chart. This is the daily chart. Now, the daily chart means that means it's a short-term picture, like what is going to happen or what is happening. Okay, in 2 days, 3 days, 1 week, 2 weeks or so. Okay, very very short-term picture. How the technicals, okay, they are doing on the daily chart. Okay, in this the short term, so that will be there on the daily chart. Okay, yes, on the daily chart, okay, as of now, although okay, I will tell you this thing later, but as of now, again, S&P 500 and the Dow Jones, they are in 50-50 condition, means 50% bullish, 50% bearish, and the entire US stock market is looking for a direction. Okay, now comes the fourth and the last point of the agenda of this S&P 500 technical analysis, and here I will give you the probable movement of the S&P 500 from September 18th, which is Monday, through September 27th, that will be Friday. So whatever is expected to happen from Monday through Friday next week, I am going to discuss that here in this the last point of the agenda. And guys, once again let me tell you that when I am discussing the probable movement in the fourth point of the agenda, this does not mean that I have not covered some of the probable movement in this part, this part, and this part. That is why I am saying all of these sections are important. Okay, I discuss this the probable movement in each and every part. Okay, but most of the probable movement is discussed here, right? Anyways, guys, next week, okay, September 20th, that will be Wednesday. Okay, the fate of the stock market will be decided, because Feds will decide whether to raise the interest rates or not. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you're looking for these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the first point of the agenda of this S&P 500 technical analysis, and first point of the agenda is the S&P 500 technical analysis on the weekly chart. So this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, let's first talk about the candle itself. If you look into this, the weekly candle, it's a heavy bearish candle, and the best part of the candle is that the S&P 500, okay, opened like here, and then it moved up, and then it gave up, and then it closed, okay, in this particular manner. This clearly indicates that there are very good, these the bearish sentiments. I will not say heavy. Okay, heavy sentiments, bearish sentiments were there on Friday. Okay, but this simply indicates that there are very good bearish sentiments, okay, in the S&P 500, right? So this is the interpretation of this candle. Now one more thing, okay, the important thing about this the candle is that if you notice that these two candles have closed below this the moving average, this particular moving average. Okay, so back to back two closings below the moving average, indicating bearishness and weakness, right? So this is through this these are technical. So what it indicates, this indicates that on Monday, no matter what, okay, either we can see a gap down open, either a gap down open on Monday, or irrespective of any open, some bearishness will be there. Even if there comes, like surprisingly, if there comes, a gap up open, then also, okay, S&P 500 will and the Dow Jones will try to give, okay, a little this the bearish movement. Okay, now whether this bearish movement will accelerate or not, that will depend on the levels and the numbers, okay, and the lower level technicals. But as of now, it is a Dow Jones, okay, which is going to provide some support, some necessary support to the S&P 500. Okay, but that is not an absolute support. I will discuss that later. Okay, but as of now, some bearishness will be there, and if all goes well, in that case, see, this is the weekly chart. Okay, so I cannot confirm that whether we are going to see a red candle on Monday or not, but yes, what we can expect is that the S&P 500 in the next week, the weekly candle, yeah, weekly candle, okay, it may be of the red color. So red color weekly candle next week. Okay, so there's a very 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 good probability, very high chances are there, right? Anyways, now let's see what the technical indicators are saying. Technical indicators, so far on the weekly chart, yes, MACD is still out of control, and MACD is bearish. This means that no, technicals are not doing as such. So as of now, we can say 1, 2, 3, 4, and so yep. So in that case, we will simply say that the S&P 500 is 65% bullish. 65% bullish on the weekly chart. Okay, only 65%, because recently we have seen, okay, there's a change in the stochastic RSI because of these the two candles. Okay, this means that if there comes one more good bearish candle, okay, not heavy but even a good bearish candle, then also the stochastic RSI will change, and that's a perfect combination, and it will then go further bearish. So overall, this is the situation that on the weekly chart, the S&P 500 is 65% bullish. Okay, and we need just one more red candle, and if that comes a good red candle, in that case it will align bearish. Simple, means in that case it will be 50-50, but that 50-50 will be in the favor of bears. Okay, this thing will be very much clear on Wednesday itself, when the Feds will decide the fate of the entire US stock market. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 technical analysis, and in this the second point of the agenda, I'm going to discuss CPI, PPI, inflation, and the FOMC, upcoming FOMC. Okay, so we will not speculate. Okay, let the others speculate. We will not speculate. Rather, we will simply talk about the numbers. Okay, and based on the numbers, the potential outcome. That's it. Nothing else. So guys, first I'm going to talk about the CPI. Okay, and this was my pre-market update to my community members. Okay, so now what we have seen is that the CPI, the headline inflation year on year, okay, it was more than expected. Okay, so Wall Street was expecting, okay, an increase from 3.2% to 3.6%. However, okay, the number was 3.7%. Okay, in case of the month on month, okay, the CPI, the headline inflation month on month, okay, Wall Street was expecting an increase from 0.2% to 0.6%, and yes, it was 0.6%. Okay, but so means that the inflation has increased. Okay, yeah, so inflation has gone bullish. Other than that, the core CPI, okay, so the core CPI, the Wall Street was anticipating a decline from 4.7% to 4.3%. Okay, and the real number was 4.3%. Okay, core CPI month on month. The core CPI month on month, okay, there was no such change. So now what we have seen through these numbers is that the inflation is holding. Okay, and the headline inflation, which includes the food and energy prices, it has increased. It has increased heavily. Okay, and other than that, the core CPI on the month on month basis, okay, we have seen that the core CPI has, there was no change, but on year basis, okay, there was a slight decline, okay, from 4.7% to 4.3%. But because core CPI gives us, or core CPI lags, okay, the CPI, the headline CPI. Okay, this means that whatever decline we are seeing here, okay, we may see a bullish reversal in the core CPI itself, right? So this was clear that now that the stock market is not allowed to celebrate, because the data will be seen as either neutral or negative. Okay, so this was confirmed that this data, whatever data was published, it is not positive. Okay, either it is neutral or negative. And if you see that the movement on 13th, it was just sideways, kind of sideways. Okay, high it moved up to 4479, low it came down to 4453. Okay, so it was clear that the data is either neutral or negative. Okay, but not positive, right? Other than that, this means that any bullish movement in the S&P 500 will be limited to a maximum of 452737. Okay, and even if the Feds keeps the rates as is, then also there are very few chances that the S&P 500 will be able to move beyond, okay, 452737 and sustain, okay, beyond this the zone. This means that now everything will stop here, 452737, right? So this was the CPI. Now the best part was PPI. Okay, why the PPI was the best part? Now in my pre-market update on September 14th, okay, the producer price index, see, PPI, the producer price index, is seen as a supportive data for the CPI, the inflation, because if the producer price index, okay, if it increases, okay, this means that people are going to pay more, everything is getting costlier. Okay, this means the inflation is moving up, inflation is not going anywhere. Okay, it is holding or it is moving up. Okay, so last month it was 0.4% and the Wall Street was expecting no change. This was the major part, that Wall Street was expecting no change in the PPI data. Okay, but the PPI number was 0.7%, means a surprising and exceptional increase from 0.4% to 0.7%. And this was very bad for the stock market, because it says that inflation is heavily holding and Feds have limited choice. Okay, now this was the PPI. Then the core PPI, okay, it came much better than expected than the previous month. Last month it was 0.2%. This time the Wall Street was expecting how much? 0.4%, but the real number was 0.7%. So okay, all of this thing, okay, this simply means that the 5.25% to 5.5% federal funds range is quite insufficient to deal with the inflation. And this is what the Federal Reserve Chairman himself has said, that there is a lot of uncertainty and they do not know whether this means this funds rate, okay, it will be sufficient or not. That is why Feds are willing to, and Feds are very open to raise the interest rates, okay, more and more, okay, if needed and as per the data. This means that after the PPI data was published, it increases the chances that the Feds are going to raise the interest rates on September 20th. I'm not saying that the Feds will raise the interest rates like 100%. Okay, I'm simply saying because of the CPI data, PCE data, core PCE, PPI, core PPI data, NFP data, whatever data was published in last 1 month, okay, it simply confirms that the inflation is not going anywhere and the inflation is holding. Inflation is going to be, bullish. Okay. Now, in terms of the S&P 500, okay, it was there that now the 452737 is not in the picture. Okay, maximum up to 4497, beyond 4497 purely manipulated. Maximum 4497 is allowed. Okay. Now, one more thing, the very interesting part, that when this better than expected PPI and the core PPI data was published, or you will say like worse than expected for the stock market, when this the data was published, then the majority of the news channels, okay, these the business news channels or these these the news websites, okay, they have not published this data. They have simply not published anything about PPI, anything about core PPI, nothing was there. Okay, this means that if nothing is published regarding this data, then be very careful. I have warned my Patreon community members. Similarly, that is why I have warned my Patreon community members that this is a potential trap, and any bullish and any good bullish movement to and beyond even to 4497 or beyond 4497 before September 20th means they are going against the Federal Reserve and the Fed chairman himself, which is not good and was never proven fruitful for the stock market, right? So this was there, and so now you know the CPI, PPI, okay, and this thing. Now, in terms of the FOMC, for now, all of these, the analysts, all of these, market manipulators, all of these are news channels, they are saying that the Feds are not going to raise the interest rates at all. Okay, they are saying like there are only 2% chances, 3% chances. Okay. But in my case, okay, considering CPI, PPI, PCE, core PCE, and all of this, the bullish data, okay, I will keep these chances to 70%. Okay, that Feds are going to raise the interest rates on September 20th, and in my terms, chances are 70%. Okay, but see, again, I am not speculating. I am simply considering the data. Okay, whatever data was published, and not just PPI, core PPI, but all of the CPI, PPI, PCE, NFP, all of the data that was published. So September 20th is the D-Day when the fate of the stock market, okay, will be decided. Not just the US stock market, but the global stock market, it will be decided. And if you are my community member, if you are my Patreon community member, then on Wednesday, okay, I will tell you that where the entire US stock market is heading to. And accordingly, you can make appropriate changes, okay, in your trades, right? So this will be there in the pre-market update, okay, on Wednesday. So if you also want to learn this, the technical analysis, and if you also want to predict, okay, the manipulation, predict the movement, even before the things happen, then you can participate in my S&P 500 knowledge transfer program, okay, or the stock market knowledge transfer program. So whatever I'm going to teach here, this, okay, This is applicable to all of the indices, to all of the stocks, crypto, okay, and currencies and futures, options, everywhere. Okay, so here, okay, I will teach the movement, the hacks, the strategies, the trend, the analysis, manipulation, technicals, predictions, support and resistance levels, and much more. And this is the motto of this the program, that give a man a fish and you feed him for a day, teach him how to fish and you feed him for a lifetime. Okay, so that's the thing. Anyways, I have these the three levels. Okay, these three levels are there. Okay, so again, okay, this is here. Okay, this is my Google spreadsheet. So whatever you are going to learn here, okay, that is there in this the Google spreadsheet. And when you open this the Google spreadsheet, then you will notice, okay, that these are the levels, and this is what I'm going to teach in very detail, including the basics, the advanced, okay, the day trading, all of the trading strategies, then the options trading in very detail with the options calculator, live calculations of the options, and these the spreads and everything. Okay, anyways, I cover all of these, then the support and resistance levels. And you know that my support and resistance levels, okay, the stock market, the Dow Jones, S&P 500 respects my support and resistance levels. Okay, and they are means they provide this a pinpoint accuracy. Then limits, movement, trend, and knowing the movement, knowing the things before it happens, then how to deduce the trend of the stock market. Okay, and everything is there. Okay, how to recognize the manipulation, then intraday hacks, short term hacks, long term hacks. So these are some important terms and conditions, and these are the snapshots of the, many people there who, okay, who have participated in this the S&P 500 knowledge transfer program. So guys, I've given the link in the description of the video and also in the comment section. Okay, and also this is my email address. If you have any questions, okay, that you want to ask, or if you want to, participate in my S&P 500 knowledge transfer program, or this the stock market knowledge transfer program. Okay, so you can simply, drop me an email. Okay, so again, I've mentioned my email here, and also the link to this program is there in the description of the video and also in the comment section. Now guys, I'm going to discuss the third point of the agenda of this S&P 500 technical analysis. And the third point of the agenda is the S&P 500 technical analysis on the daily chart. Okay, now yes, this is quite important. So at first, the candle itself, the last candle that was formed on Friday, it's a very heavy bearish candle. Heavy bearish candle in a condition where the open was almost equal to, or approximately equal to, the high. Okay, then a very heavy bearish candle. So this clearly indicates that the S&P 500, there is clearly weakness in the S&P 500, and S&P 500 is getting bearish, because the condition to go bullish. Okay, so what was supposed to happen is that S&P 500 was supposed to sustain like this for 2-3 consecutive days above the cloud. Here, okay, it was expected to happen, okay, because of the manipulation on Thursday, but it failed, right? And now it is coming back. So it is coming back to this side of the boundary of the Ichimoku cloud, that is around 4,300, 4380, etc. Okay, and once it breaches and sustains, closes below this the Ichimoku cloud, then it will be true bearish. And one more thing, that the candle itself is saying that on Monday we can see, some bearishness, either in the form of, gap down open, okay, or irrespective of any open, okay, some bearish movement. Okay, and if there comes like, gap up open on Monday, then also, some bearish movement will be there, okay, on Monday. Now in terms of the technicals, okay, why I am saying that the S&P 500 is, 50-50, okay, in terms of the technicals. If you notice, MACD is trying to go bearish, but it's not bearish. Stochastic RSI, okay, it was bearish. Okay, they manipulated the S&P 500 and the entire stock market. Then stochastic RSI changed to bullish. Then there was very heavy fall. Then the stochastic RSI we have seen again bearish. MACD, if there comes, one more thin candle, green, red, doesn't matter, thin candle or a red candle, in that case MACD will also change to bearish. Once MACD is bearish, stochastic RSI is bearish, then done, means bearishness will be there. Other than that, okay, as of now the S&P 500 has closed below all of these moving averages, okay, inside this cloud. In terms of the divergence is normal, hold, okay, fine, and yep, everything looks okay. So this indicates that the S&P 500 is simply 50-50, because if you notice that the S&P 500 has closed below these the moving averages. Okay, all of these are moving averages. All the moving averages are supporting, okay, means or moving averages are in a fan out okay, this kind of formation indicating a bullish movement, but because the closing is in closing itself is below these are moving averages, this means that it is means that there is weakness. Okay, just one or two more bearish candles and then crossover in the moving averages and it's done. So when it happens, so most likely okay on either on Wednesday, okay, or on Tuesday. Okay, so Tuesday, Wednesday morning, sorry, Wednesday afternoon, okay, Feds will decide okay whether to means what to do with okay these interest rates, whether to raise or not. On Tuesday itself, okay, if there comes like Monday and Tuesday, if there comes two one thin candle and one red candle, I think that should suffice. Okay, this is the condition, and in that case it should bring more bearishness. Anyways, if you're my Patreon community member, then through these updates, okay, I will help you understand what is happening, okay, and what is expected to happen. And yes, there is one more thing, that if you want to join my Patreon community, okay, then let me tell you that how you can join my Patreon community. But before that, so you will get, so once you join my Patreon community, then you will get the daily analysis, that the daily updates of the S&P 500 from Monday through Friday, as well as these the stock market opportunities in the premium stocks of the US stock market. Okay, so yes, now let me tell you that how you can join my Patreon community. Now guys, in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. So when you follow that link, then you will see that this is my Patreon page, okay, and this is my Patreon profile. And on my Patreon page, you will notice that there are these the two levels, the two tiers. Okay, so there is no difference. Okay, in these are two tiers other than the geographical location. So this the daily S&P 500 updates. Okay, this one is for non-US and Canada residents. This daily S&P 500 updates is for US and Canada residents. So when you subscribe for either of these two, then you will get the daily S&P 500 analysis updates and the probable movement from Monday through Friday every day. Okay, pre-market update, first, second, third update, final update, and as well as you will get the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market, the top 30 companies of the US stock market. Okay, and guys, if you notice that many people have joined my Patreon community for last many days, months, okay, more than a year, okay, and they are getting these daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything, and they are very well aware of the things even before the things happen. So guys, whenever you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the fourth and the final point of the agenda of this S&P 500 technical analysis. And this is the probable movement of the S&P 500, which is applicable from September 18th, okay, which is Monday, through September 27th, that will be Friday. Whatever is going to happen in the S&P 500 and in the entire US stock market from Monday through Friday next week, I'm going to discuss that here, okay, in this point of the agenda. Now, before I tell you about this S&P 500, okay, we need to look into the Dow Jones. Okay, so when you look into this the Dow Jones, okay, so what you are going to notice is that on the daily chart of the Dow Jones also closed below its moving averages. Fine. Okay, we have seen very heavy this the volume also. And also in case of the Dow Jones, if you notice the same thing with the MACD and the stochastic RSI. So Dow Jones, if there comes this a candle, a very thin candle or a bearish candle, in that case MACD will go bearish. Okay, and once the MACD goes bearish and the stochastic RSI goes bearish in the Dow Jones, then it doesn't matter what the S&P 500 is doing, everything will go bearish. Nasdaq, S&P 500, everything, right? So this is now one more thing, okay, that I wanted to discuss here, okay, is on the weekly chart of the Dow Jones. Okay, that is very important because last time also Dow Jones managed to say the S&P 500. Okay, now this time, okay, this time the weekly chart of the Dow Jones, okay, this is the best part. Okay, so on the weekly chart of the Dow Jones, if you notice, two candles closing below this the moving averages, this moving average, two candles are closing below the moving averages. Fine, that is first point, there is weakness. Okay, other than that, the pattern of these the two candles, okay, this pattern itself confirms what it confirms that there is more weakness, okay, and bearishness is expected to come. This pattern also says that on Monday we can see either a gap down open, or irrespective of any open, some bearish movement, okay. If not, then once the weekly candle forms, okay, by next Friday closing, okay, on 22nd of September, okay, when the stock market will close, then by that time we can see a red candle, a red a red candle, as simple as that. The only condition when we cannot see or will not see the red candle, if on Wednesday, if the Feds, okay, they give some more breather to the stock market by announcing that they are not going to raise the interest rates. And no, see, that is one part. But if they say that they are going to they are going for the rate cuts, okay, earlier than expected, that case only, the stock market, okay, it can get some breather. One more thing will be there, if they say that that they are almost done with this the rate hikes and they will not raise the interest rates anymore, that can also work. Here I'm doing the technical analysis. So technically a red candle should be there, fall will be there, okay, and the weakness will be there. Yes, a reversal is allowed, but the reversal will be limited. A very limited reversal is allowed, right? So I hope this that through the weekly chart of Dow Jones this thing is clear. Now this means that in case of the S&P 500, the reversal will be limited to what? In case of the S&P 500, the reversal will be limited to, again, 4471 is still there in the picture. It is not going anywhere, at least until Wednesday, you can say, okay, or for the entire week, but at least until Wednesday the 447 is there in the picture. Any reversal is allowed up to 4471, not a problem, because the moving averages, everything is there, the level, everything is there, okay, fine. But what happens at 4471, okay, that will then decide the fate of the S&P 500. If the S&P 500 manages to sustain above 4471, in that case it can move towards what? It can move towards the boundary of the Ichimoku cloud, okay. But before it can move towards the boundary of the Ichimoku cloud, it has to deal with the open of this heavy candle, okay. Open of this heavy candle, it was 4497 itself, okay. This means the 4497, okay, this is our calculated resistance level, okay, as well as now the open of the candle is there. This means that even if the S&P 500 manage to sustain above 4471, then 4497 will not allow any more bullish movement. And one more thing, before the Feds, okay, they decide whether to raise the interest rates or not, that will be 2 p.m. Eastern time, US and Canada time, 2 p.m. Eastern time on Wednesday, okay. S&P 500 technically has no reasons, or you can say that technically it is not allowed to move to 4497. Forget about beyond 4497, but it is not allowed to move to 4497. And in between there we have 44, what was there? No, this number will change, okay. We have seen 4478, then 4486 was yesterday, okay, that confirmed the bearish movement. This number will change, okay. I will update you if you are my Patreon community member on the daily basis what this number is, and this number is very, very important, okay, because this number will define whether intraday we are going to see this a bullish movement, okay, or the bearish movement. And last 2-3 days, okay, it has proven fruitful and it worked beautifully, okay, to this the mark. Anyways, yes, so until Wednesday this is not there. Now comes the subjective movement. If the Feds they decide, okay, or if the Feds say something that is positive to the stock market, in that case what will happen? In that case, yes, it is allowed to move up to what? Move up to 4527 and 37. This is the zone. It is allowed to move up to the zone 4527 37, right? And now what happens at this zone? Then this zone will decide the fate of the US stock market. Otherwise, up to 452737 and it's done, okay. This is in this the bull side. Now there comes this the bearish movement, because the bearishness is there. As I mentioned that any reversal will be limited to 4471, okay. And if it fails at 4471, then it will be coming down. It will be coming down to what? It will be coming down to 4449, okay. It is there, is still in the picture, 4449. It will be coming down to the to this the 4449, and once it comes down to 4449, then we will have to see what is happening on this the 4449. Now if the S&P 500 managed to sustain at 4449, just like we have seen the closing, Okay, that it was the S&P 500 on Friday. There was a very heavy fall, but still it managed to sustain at 4449. If the S&P 500 gives up the 4449, then it will be moving to 4425. Okay, and then 4425. After that we have 4396, we have up to 4355. Okay, it was there. And if all goes well, and if on Wednesday the Feds decide to raise the interest rates, then 4265. Okay, or you can say that this the 200 day EMA, which is approximately 4255, 4265. Yes, let's keep it up to 4265. Okay, around 4265. Okay, it will come. So as of now, if we measure the fall from here to 4265, then how much that will be? 4265, only 4%, 4.2% only. Okay, that is fine, perfectly fine. Okay, not a problem. S&P 500 can give 4% within a day, so we are talking about week here. Okay, anyways, but yeah, okay, this thing is there. Now there is a few more things that you must understand. The S&P 500 will not be able to move beyond 4384, 4384. Okay, as such, because the reason is that 4384 is the boundary of the Chimoku cloud, and the S&P 500 cannot breach the 4384 as such, because once it breaches, then we will have to look into the closing. If it closes below the boundary of the Chimoku cloud, okay, in that case it is done. In that case we will see more and more bearish movement, right? Now there is a very heavy probability that on Monday and Tuesday, the that we might not see any good bearish movement, okay, or any bullish movement, rather some kind of sideways movement, and then very very dull movement. If there comes a dull movement on Monday and Tuesday, this means that they want to know what the Feds are going to say, as simple as that. If there comes bearish movement, okay, on Monday and Tuesday, even before the Feds decide, okay, on this rate hike, this means that either they know something, or they are fearful of the Feds, and whatever they have done here, this the bullish push they are given, okay, they are simply exiting their positions, and they are simply booking their profits, because they have formed a good bullish trap. Okay, again a bullish trap, and now they are simply selling heavily, okay, and they are booking their profits, and they do not want to take any chances. And there are chances that the Feds may raise the interest rates, although everyone in the stock market, everyone in out there in the market, Wall Street, the analyst, okay, they are saying publicly they are saying that only 3% chances are there that the Feds are going to raise the rates. Okay, but in my case, okay, I'm keeping it 70%. Anyways, okay, let's not speculate on that part. Okay, we are technical, so we are technical people. Okay, we should focus more on the technicals. Okay, so this is there now. Yes, I mentioned 4484 is there. Yes, and guys, there will be a little bit surprising movement on 20th, on Wednesday, around 2 p.m. 2 p.m. 2 p.m. to 2:30 p.m. 2 p.m. the decision will be published, whether they have raised the rates or not. 2:30 p.m. the Federal Reserve Chairman, okay, he will hold the press conference. Okay, so just before 2 p.m. and between 2 p.m. and 2:30 p.m. and after 2:30 p.m. So there will be these the three different movements. Okay, so in my second update, okay, to my Patreon community members, okay, I will clear this the movement. So before 2 p.m. I will clear in the first update. Between 2 p.m. and 2:30 p.m. I will clear this in the second update and in the third update. After 2:30 p.m. I will clear this in the final update or in the fourth update. Okay, and accordingly, make changes to your make appropriate changes to your trades. Okay, so this will be there. Yes, so Wednesday movement, okay, it will be surprising. Okay, a bit surprising movement, right? So guys, I hope this the entire scenario is clear, that when the S&P 500 can go bullish, when the S&P 500 can go bearish, when it cannot go bullish, when it cannot go bearish. Okay, so you can plan your trades accordingly. And if you're my Patreon community member, then you need not to worry about, okay, these things, because every day, okay, I give these the daily updates, the daily analysis of the S&P 500, and I help you understand what is happening, okay, what is going to happen. Okay, just like on Friday, it was very much clear that, because this the bearish movement and a heavy fall, it was not surprising. Okay, we were already anticipating that. Okay, the condition was the 4486, we were just waiting for the 4486. Okay, that once the S&P 500 goes below 4486, then yes, it's done. No more bullishness. Okay, clear. So if you're my Patreon community member, okay, then I will give you these updates and everything. Okay, and accordingly, okay, you can plan your trades. So guys, if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. And also I've given the link to my services, the 30% returns in 1 year, and this, the stock market knowledge transfer program that is there. And guys, if you have any questions that you want to ask, then please feel free to ask. Okay, and if you have liked this video, then hit like. Okay, so guys, this was my S&P 500 technical analysis for the next week, that is from September 18th, which is Monday, through September 22nd, that will be Friday.